So I do expect us to see the green zone again. So any hedge stops that have been acquired shouldn't be sold or shouldn't be dragged below the green zone. And every target has been hit. You can almost say that the key point up on the high of the green zone is something that we consider now. So there we are, just straight back to the target again. 3 targets off already. Beautiful movement. Now we have to watch out for it to come back to test that high. Could be a little bit more drawn out, but that's okay. more than enough to make it safe. Here's the red yellow line and basically the target. Don't be greedy. There we are. 4 targets down. Not even 10 minutes into the day. What movement has there been that's not accounted for? Watch tomorrow. Every single one of these targets, it won't work like that. They'll change it. Confident. Every individual in the world that understands that clarity will be trying to make it part of their trading strategy. And it works in this environment right here, right now. Not in every environment. That's one thing that market's trying to teach everybody, it would seem. All the way back into the 61 area here. As we can see, that's a pretty common fib. Super congested again. And of course, any hedges that were taken or any trades that were taken, you don't have to cut the whole thing. You let the rest of it run, and we look at hedging the rest that's left over. little bit of a B points formed up here now. Got a trend now because of the right shoulder and the head. Could turn into a head and shoulders to inverse. There's another target. And that's the trend break right there. We could see it potentially make a right shoulder as well. So it's like a head and shoulders to an inverse. Some music on there if you want to readjust it. Just readjust the volume of the money tunes dude in the call. But there is the trend break. More like a 3 drives pattern just played out. First, second, and third low. Brought it back to the first of the 3. I'd like to see the green zone again ultimately, but little chop is okay. So it looks like we're going towards the green zone there. Must make sure it's protected in the event that you took it. The green zone. Absolute precision.
Kind of spiky up here, no way, for going up.
Pardon?
Do you find it kind of spiky up here for it to continue to go up?
Well, I think it's kind of trying to put a grind on the green zone. So like the first 2 we're kind of like knocking on the door. Now we're trying to grind it a bit.
Morning, by the way.
Hey, morning.
I've got the 30-day free trial on Trading View, by the way, which is pretty good.
Oh, right on.
Yeah, I was just I was wondering what your settings are, John, on the volume profile.
Oh yeah.
161 to 60. Okay.
Hmm.
Sorry, John, do you use number of rows or ticks per row?
Row size
Okay.
161.
Okay. Yeah, I was just a bit weirded out because my POC hasn't moved at all. It's like in a different place compared to yours, so I wonder what that's all about.
Because you're looking at a different amount of candles.
I don't think so. Mine looks pretty much the same, I think. I don't know.
Hmm.
It varies.
Yeah,
It
yeah.
definitely varies. Yeah, yeah. From my screen to his screen sometimes, but it's around that general area. Depending on how much you zoom out and zoom in, it'll change.
Yeah, it's the first time using this one, so.
Definitely great to have with the color formations. I use the same colors too, and geez, it just really works.
Yeah, yeah. I actually managed to look at some of John's screenshots earlier today, and I managed to get that all set up, so it looks pretty good.
I mean, as you can see now, as soon as it hits the on mine, anyways, the leaf starts to leave the red zone on the volume profile. It gets resistance there and comes back down. But I notice that a lot. You can use
Mm-hmm.
that sometimes as confluence. Works really well.
That's a pretty good one there. Cheers, Randy.
I mean, where there's no volume, it's gonna have issues trying to get through it, both on the bottom and the top.
Big old candle. I just realised as well that the clocks changed, didn't they, in the US? So that's why I was a bit confused.
Yeah.
I was here at 1:30 in the UK, and I was like, oh yeah, market opens, and then yeah, the clocks went. So
Yeah. You guys switched what, a couple of weeks ago or something?
yeah, we did. That's why I was so excited. I was like, oh yeah, an extra hour of training before I get to go to work. But then it changed again, so I was like, oh okay. So I managed to get a few good trades in already, so that's good.
Nice.
Yeah, I got new lenses over the weekend for my glasses, so I'm just still adjusting my eyes to the screens and stuff.
Tell you what, I actually have glasses. I need to start wearing them.
I find I just gotta focus. Just gotta get used to them. I think it'll take about a day or so, and then I'll get used to them. But yeah, it's kind of weird.
It is when you first get new glasses for sure. I mean, like to be fair, I never used to wear glasses. I mean, when I last went to the Philippines to see my girlfriend, I ended up basically going to obviously a place where you get them done, and I got my eyes checked. I was like, oh goodness me, I actually really do need them. And when I wore them, I was like, it's like I've seen everything in 4K. It was beautiful. Pretty much did the exact same thing again there, right, with the volume.
Back when I got it, all I did was just look at the volume. I didn't trade or anything like that. Just look at the volume and see how the price reacted to it, and when the markets went up and when the markets went down. And even in consolidation, like it's really helpful too.
Yeah, yeah.
Like it's huge, and it's a big difference like having it on your own screen as opposed to just looking at John's all the time. Um, because when you're in a trade and stuff, you just kind of want to look at your own screen for a bit and then
Hmm.
check out his zones and stuff. So, but yeah, the volume thing is very, very important.
I was actually using a different volume profile than like a free version, and I got the free trial with Trading View, and this one is like definitely a lot better.
Yeah. See the 1 minute too on the RSIs underneath the 15.
Oh yeah.
Hasn't breached it yet.
Like we've had 2 back-to-back Head and Shoulders almost. And in here we had another one. The green zone is something of interest for the break of the yellow. Watch out for the yellow to get retested also. Something that's allowed.
Yeah, it's got a little resistance at my POC here.
Mm-hmm.
volume scale, if you just keep your trades outside of the red zone, you're in the
Mm-hmm.
money.
Yep.
In every one of them, really. I mean, not many points on them, but could turn into a lot of points depending on, when you get in.
Definitely.
But trading in that red volume, though, should be friggin' faux pas. Nobody does that.
Mm-hmm.
Because there's always a better sort of entry or solution.
Like the right shoulder retest, basically.
I gotta dip out, guys. I might be back later on. Gonna head to work, so I'll catch you guys later.
Hey, man.
Have a good day.
You too, man.
Bye.
Take it easy. I mean, it looks like we played out right to that green bar. Any orders that were hit on the green bar are now filled. Anybody that accumulated anything to get back to that green bar is now profitable. That's like 10th profit target, first hour. And it just came back to hit this one here too. I didn't have enough time to change it.
Just funneling around the middle. I mean, if you look at the 15-second RSI, the low this morning was on the bottom of the 30, and the top was at the 70. So right around the POC. So, but it seems to be reluctant to go down too, because fear is fast. And of course, the middle and then 1 minute RSI. So
Yeah, really. I think it's trying to knock on the green zone again.
Still like working on the shoulder of an inverse. Seems.
Yeah. Well, it kind of made a head and shoulders in here.
It's true.
Of course, it has to be made safe by anybody that's taking it to the green zone.
It hasn't been that high this morning either. It's only at what, 9.7 now.
Mm-hmm. Yeah.
Morning, guys.
Hey, morning. Now remember, the red zone that goes with this green zone is significantly higher. Could take some time, of course. Many fake outs along the way.
Yellow line there, John, go back a ways, or where's that from?
Nope, just from today.
Oh, okay. Triangulating now, I guess. Eh?
Yep, it's like it's made an inverse to a head and shoulders now. Just never-ending cycle of head and shoulders to inverse head and shoulders. Not a sequence has went by where we have not been inside of a head and shoulders. So this is one. This is two. No. This one's the inverse, sorry. This one failed. It still was a head and shoulders. So every single one of them has a high with a higher high and a lower high, or a low with a lower low and a higher low. Ultimately, I'd like to see us get on top of the green zone. You know, because I see the market's in a position where a lot of the individuals, even if they were in from the bottom, you know, I know people, you can count on them out if they're day traders. You know, if they've like pretty much bought in for the long haul and they don't look at the charts anyways, they won't figure out where to sell um, based off of it, based off of the same things that the day traders will. So I find it likely that the majority of the people that have the best exposure are going to be the ones that intended to take it up to 15K because it was part of the plan, and it was the entire earnings season conquered completely with absolute intention. And for anybody that tried to like play the game where it was like, I think AMD is going to go up, I think Apple's going to go down, you know, it's like they didn't give them much. You know what they gave the people the most? The people that bought and expected 15,000 before a single earnings report came out. And if you did that, remember on AMD, I'm making a video on it right now. I'm still not done it yet, but I literally specifically said on AMD that they were going to go up, and having exposure to AMD could be a multi-day hold, and 15,000 was the target. Like it's like there wasn't even a piece of information that I left out. It was all the clearest analysis, and I'm very proud of it. Wish it reached more people, but that's okay. One day it will.
Day right now is kind of starting to look like an M.
Yeah, it could be actually.
Big B point in the middle there.
Mhm. It's a very risky time to make a decision, though. Good for observation.
Yeah, I'm chilling. I'm not making anything. Sean.
Oh yeah, thanks. Yeah, we're not really developed into these ones, but you can see we made a W. New B points formed. There's the B point. I don't really consider it hit though. Off of the 141, it could still play out again from a later level. Almost like it made it to a 61, but or well, like a 50, but it didn't. That's not even really a shorter term move. It did, but the bigger picture looks like we're just coming back to the tip of the triangle. ultimately we're putting volume inside the green zone that it otherwise wasn't able to put. We're really grinding the node basically on the high now. Honestly, it's like the same triangle again. Oh, thank you. Yeah, the sideways movement is very similar to the one that we just did right here. It's up then sideways, but notice this one. Undeniably, it went up, and then it went sideways. And that's what we've done again. And on the daily, excuse all these lines, but there's only one line that I'm interested in looking at, and it's the one across the top here. That red yellow line. And it cuts through the highs of every single one of them. And that's where we are right now. That red yellow line, just for some perspective. But I'll be right back. All right. Got the old coffee going. It's like we have a bit of a range going on right now. The idea that it has a blue line on the bottom and a gold line on the top.
Man, this thing's moving blazing fast today.
Yeah.
Every time I turn my head, I'm thinking, am I still looking at the same candle?
Okay. Check. Yeah, by the way, with this kind of movement, after what we did in the morning, nobody should be interested in doing anything with it. It's like I literally put on, I think, what was it, 10 green dash lines I've taken it off, and each one of them was worth more than 20 points. So what's happening in here is terrible. It's the channel that's kind of bleeding out of the bottom. It's hurting more people than it's doing good for right now. And when I can see that that's the case, like, it means we got to watch out for the market to kind of be in a mode where it's trying to trap people, and a lot of people weren't ready enough for the moves in the morning there. Like, it's like, just foggy morning Monday, and then all of a sudden it's got these clear moves. A lot of people are in the wait and see phase. And then by the time everybody's woken up a little bit, it's freaking slow as heck. And I assume that that's going, like, I mean, like, it's going to be the reality for a lot of people that that they feel the slowness right now, regardless of how the morning went or not.
And the morning was good, so it makes it easy to endure this slowness. But shockingly good. It was like literally textbook all morning. And of course, this blue line that's broken, that's the support of the channel that we have right now. It's not a favorable environment. It's just squeezed people out. Literally, we will see that blue line again in the future. Honestly, the farther away we get from it, the better. Like, I would like to see it get really far from it, like second VWAP kind of far, like bottom of the purple zone. But at the end of the day, could be just wishful thinking. There's nothing really signaling anything right now. I don't like it at all. Nothing about it. He couldn't make me trade it with a gun to my head right now.
Yeah, you said it was textbook. For me, it's textbook. Stay the fuck away from me.
Yeah, textbook in the morning it was. Yeah. Over here it was great. When the first things first, as soon as the market opened, we popped up like that, and I put these two targets in here, and immediately it went to a 188-200 and came right back to them. And then when it popped up above these levels, then it became that target there, and then there was a bunch of like little head and shoulders in there that were all hitting their targets as well. And there will be more movement like the morning. Honestly, I find it normal for it to die off around this time of day anyways. If you think about when the ATR usually takes a little bit of a nosedive, the average size of the candlesticks start to get a little bit smaller around this time of the day. And I mean, it flushes a lot of people out. Okay, there's that blue line, eh? So like, hardly the best trade in the world, but if you did take it, man, oh man, was it ever just the blue line? So it's like sometimes it's like, yeah, you better just get the target if you're going for moves like that. Not to say anybody should have taken it. I didn't take it, but it did do what I wanted it to do and hit the blue line, and that's normal. And I'm like, well, you see what I mean? Where I would like to see it get as far away as possible because it was destined to get back to it. Clearly, it was, and it wasn't worth much because it was such a small move. And I'm like, okay, well, that's fucking burnt up now. Pretty much that the whole idea of it returning back to that blue line is as swiftly as possible. I mean, it could go farther now that it's already tested it. So see, with environments like that, it makes it more attractive when we haven't tested a blue line like that, go to another confluence that's far away, and it also insinuates reversing towards the blue line as well, makes it work even more. But when we've already tested it, it's like, why do we have to go back to test something that's already been tested? You never have to. Like something that hasn't been tested might have to be tested, but something that has been tested might not have to get tested again. Now, it doesn't mean it can't be, but it doesn't have to be. That's the way that I see it. Maybe it is a little bit complicated, but it is the case that without a test, it might need a test, and if it's already been tested, it can be tested, but it doesn't need one. That's the way. I'll think about that and explain it in a little bit of a less tongue twistery type of way, but it is like that very much so. At the end of the day, the next thing that comes, it's like fishing. Like I say, I mean, we can't choose how big the fish is going to be. We can't choose when it will come, right? I can't. I mean, maybe they have technology now. I don't know. But at the end of the day, no. At the end of the day, we don't have any control over whether or not the market provides big moves or small ones, or whether or not it provides any at all. And that's another interesting thing. So when people are like, how much are you going to make next month? Well, does the market move at all next month? Like it's very interesting. It's very, very like that question. I've seen it come up a few times, and it does happen with people that are starting out fresh because they want to calculate how well they can be doing. You want to know what's interesting is because they want to feel like secure, and I say this because it's human, but but it's a ticket to the emotional roller coaster as well. Something that I think is very good to bring awareness to, because nobody wants to be on it. Yeah, nobody wants to be on that ride, that's for sure. And the thing, that really keeps people off of it is discipline and patience, ironically. Which the more and more and more that you employ them, the less of a task they seem to be. Like, oh God, I gotta be patient. You never hear me saying that. You know what I mean? I'm like, literally. But some people are like that, though. I mean, I've been patient for so many good things in my life that I know the value of being patient. Like that's a good way to put it, really, I guess. Like, that's funny that I say that because, like, I was going on a rant about people that were cheating in video games the other day, and it made me think about, um, because they haven't accomplished anything in their lives yet, that they literally have to cheat to get there. And I'm like, well, if they knew what it was like to conquer something that they worked hard for, they wouldn't be caught cheating a mile away.
I find
Yeah.
you're gonna set up a website to
Yeah,
sell
right. Yeah.
Tarkov cheats, and as
Yeah.
soon as they hit the Tarkov button, it like deletes System 32 or like shuts their computer down.
Yeah, we need
So
more
they're
of
not
that.
playing Tarkov, yeah, but I'll get their money. So it's like a win-win.
Yeah, all the power to you, man. All the power to you.
Bastard cheaters.
Yeah, I know. I ran into one the other day. I was like, bro, well, you don't make the game fun. And he was like, so? And then he killed me, and I was like, oh man, bastard. Okay, but
Spend the weekends doing it. It's brutal.
yeah. What
Have
can you
you
do?
noticed someone who says, "Oh yeah, on the weekend I don't play Tarkov, I cheat it."
Oh yeah, exactly. And you can guarantee they'll be
That's
cheating in other
outrageous.
areas of their life too.
Yeah,
Just
I spend my weekend cheating.
Yeah, exactly. Making
The
it
hell?
making an unpleasant time for every other human being that has association with me. I'm like, that's, is that a bad person? I mean, like, oh, maybe they didn't think that far. I'm like,
People
geez.
don't have friends, but it's like if someone didn't have friends, it's like, what are they doing with their lives?
Hmm.
That guy probably just doesn't have friends and he just cheats all day. I don't get people, man.
Yeah, yeah,
Go out, go have fun or something.
yeah, yeah. I mean, nobody likes it when other people have fun, like taking your fun away. I mean, like that. I don't got any time for that. That's what they do. That's what they do. That's what they do.
Cheating to them is fun,
Which is
a weird cycle.
backwards. Yeah, exactly. Yeah. So if you didn't see here, this doubled down. Sorry. Doubled down. And we've essentially doubled that range from the top to the bottom now. The range that's in here, it's very clear to me that, let's take a look at one of these other charts, that we've developed a node in here and we're trading. Oh wow, it's already got a range. It already makes complete sense on this chart. Jeez. Got a red zone and green zone that's already here and it's contained perfectly within this area. already previous analysis drawn in.
For 261 to that B point at 11:11.
Oh yeah. See that 261 B point trend line. This is a blue line that I think we're going to get back to ultimately as well. So we're back at the volume node. Essentially, inside of this area where we have the red zone and green zone, I originally opened this chart to be able to highlight this area in the middle, and I was going to put a green zone or a red zone on the top and a green zone on the bottom. I'm not going anymore. I like the gold zone too. The gold zone was important in this area. It's like when it was here before, it chose to use red zone and green zone. It is a fact that it's here again, and there's an incredibly strong argument to that it respects the same levels that it did when it was here last. And the question becomes, are we closer to the end than the beginning? Is there less times to use the green zone and red zone than there have been in the past? Like have we already used it more times than we will use it in the future? Becomes an interesting question. What happened to me? Some more music on here. Watch for that blue line. Blue line is getting hit.
almost at that B point.
Almost. It's gonna get there though. Gotta watch out for any tests of the blue line from the upper side though as well. And like the other chart I have, blue line. Took us back into the range. What is this, 61 area as well? Gotta watch out for that 61, I think, because it's right near the POC. It's already gonna be at the 61 to some of the smaller moves here. Close. That's the B point as well. So the B point is a 61 on one of the highs there. It's a major one too, just out of curiosity. You know, I've got this level marked here as a red line because that red line is POC on the hourly. Very long term. I marked it basically. So I'd love to see that turn into support. Like this red line turn into support. Be nice. There's the B point right there. Yeah, that was a nice 261 reversal there though. I do like that.
And another trade in the yellow on the volume profile too, right?
Yep, yep. Almost at the extreme there, yeah. I like it.
Yeah.
You know, the whole
Yeah, so the
thing.
only time I'm taking them is on the outside. I'm not going to take any in the red zone. You know.
Yeah, exactly. Well, I mean, all the trades from today, this morning, they've been relatively extreme when they were, yeah. Like at the end of the day, the first one that popped up, I mean, there was no better extreme than that one, and it's been okay when it gets involved with the low of the node. I mean, there's not been many times where it hasn't offered anything off of the low of the node. In fact, it has always offered something off of that level. Even if it breaks through it, like, I mean, it offered more than enough. Debatably, like, when it came down, it didn't come out down off of that low. It came down off of that gold bar. And I mean, we just stepped on that gold bar again right now. I think it's sneaking its way in there every now and again. It's a pretty respectable level. But you know, if you have the 261, it's a keeper, and we focus on hedging it by the end of it all. If we can find a hedge trade that could
get us back into the middle, that would be ideal. But doesn't look like it's really setting up a B point to come back to, right? Unless you're talking about this thing right here. But it's knocking down some pretty important levels right now. We're coming up to a another downtrend. We're at the 61 too, so could make an inverse head and shoulders. I mean, how many inverse head and shoulders did we see today? I think there was like 6 of them or so next to each other earlier. And you know, like this kind of move right here, where it makes a channel, and then decides to spike out and come back in to threaten the downtrend. It's a very aggressive way to, you know, get everybody accumulating long, and then stop them out, take their position from them, then go for the trend break that they wanted to be in for the first place. Now the problem is when we get to areas like this, we have to deal with chasers. Now what's funny about that is the chasers, anybody that's buying up into this move trying to chase it, what is the reality of what they're doing? Are they not providing liquidity at the B point? So anybody that tries to chase this kind of move, technically they just offered liquidity to those that wanted to take profit at the B point, which I mean seems to be really unaffecting it. You know, we've got a steep trend that's destined to break ultimately, but each time that it breaks in the short term, it could be like crap until we actually get somewhere that's worth breaking a trend from. Now I'll tell you one thing, we could have a range here. When I originally came to that chart, the idea that I had was to make a red zone and green zone on the short term here. Maybe I'll do it on this chart. But like this area in here, that area was like this. Okay, so every other one of these lines, they come from over 2 years ago. So it's a little bit, takes a minute for them to even load and stuff like that. But this area in here, I'd say, pretty good red zone. Same thing on the bottom for green zone. Gold always gets to go on the top. See, like, part of me was considering like this area having made a spike of similar size on both sides. It's a sloppy version of what we usually do. Like this movement right here, it's suspiciously very similar to the size that we had here. And I mean, you know, one thing that it's like a cross between this and this. See, I was talking about the right shoulder earlier, could make an inverse head and shoulders. This like that inverse. Terrible though, but I mean it is the components that we have when we make an inverse head and shoulders, undeniably. Gotta watch for the 61. This is like a point where if any hedges were taken on that steep trend break for the right formation of the right shoulder, we'll make sure it's safe by this point. This is the low of that node. Also, there is a B point in the gold zone up there now too, so we can mark that. Really trying to get to that B point, but then it got held up by that gold bar. Gold bar just so happens to be the gap on the screen, the divider between the heavy volume and the light volume, the value area. Nice thing about this is it can have a trend. Oh no, I'm just not saying anything. I'm just making the triangle. Looks like a big triangle. interesting thing is with this move, it means that when we break the extreme of the triangle, we have a place to put our B point, or place to put our fibs. I think we might be getting, honestly, a bigger version of what we did in here, but with less of a spike. But I wouldn't be surprised, you know, like, funny enough, last week, we didn't see this a lot, eh? You know where it was going spike and then just screwing everybody out, right? That was actually a week before. So like like this was like we didn't really see this last week because like look, whenever it went sideways, what did it do? It didn't go down and spike everybody up or spike everybody out. It literally just went up. Most of the consolidations that were choppy, I mean, they didn't have spikes at the end of them. You know, like they would just rally through the top. Another major thing that I wanted to talk about as well is how we got associated with pretty much every single green zone. So I say oftentimes I'm like, how do we make it through green zones? Well, you know what? It's changed. Every single time last week that we've done it, we hit it twice. We went smash smash and then we bashed through it to step on top of it, turn it into a support. So we smashed it twice and then smashed through it just to turn it into what ultimately would be a support. This time, on this one, is a little rough. But like, let's look at one of the other ones. You can see here, same process. Smashed it twice, first two tests of the green zone, and then it bashed through them to step on top of the green zone. It did a little bit better than it did it above there. Then we got other ones. We got other ones like, let me look here. On the other chart. This one, yeah, check out this one. I would hit it twice and then stepped on top of it. You know, 2 hits on the green zone. And then we had another one down here on this chart where, you know, it kind of smashed through it twice, but then it came up and then stepped on top of it and then carried on through. So like that whole idea of having 2 moves that are associated with, you know, throwing everything we've got at that level and then stepping back again, smashing through it just to come and conquer it, step on top of it and then continue. You won't find it on Google. That's because it'll change really soon too, and people that get used to this will have to understand how it's changed and why in order to be able to continue making money. But just understanding one pattern, just understanding 5 patterns is not good enough. We have to understand how those patterns can change into other patterns in order to be safe. It's like it's as simple as like, you know, how many different types of weather can we get, you know, and it's like, imagine somebody didn't know about one of those types of weather and your job was to prepare for all of the weather types. It's not that hard when you know what to do, right? You can either put a raincoat on when it's raining, you know, you can do, you know, whatever you need to do. Sunscreen when it's hot, I guess. You know, you basically, once you're aware of exactly what you need for that environment, you can prepare for it, is my point. Okay, now another thing. I explained how the green zones worked, right? We really smashed them. Like even here, like look at how sloppy it is though. But look, 1, 2, and then it smashed on top just to step on top of it. No? Or am I crazy? And then continue. Just like the diagram I drew not too long ago.
smashed it twice, and then stepped on top of it. And effectively, another thing that I noticed last week that was really important was that 5-wave moves only made it back to the 4th wave. So like this is huge. This is huge. I'll show you from the beginning. Check this out. Oh, actually, you know what? I'll show you in the environment that we used to have. Okay, so like, okay, this is the old environment where when we did 5-wave moves, they would work out. Like, oh yeah, like check this one out here. Everybody can see that it went 1, 2, 3, 4, and 5, and it smashed all the way back down. And like comes out of an environment where, you know, even in here it might be sloppy, but 1, 2, 3. I mean, the 5th wave is really long, but it's still, the point is they came down off of them. Like look at this one here. You see how it goes 1, 2, 3, 4, and 5, and then goes down. Most of the pattern's gone, right? Like the whole 5-wave move gets retraced, and then even right after it, well, so we go from that environment, right, and to start seeing things like this, where okay, look at this one here. So you've got this 5-wave move, 1, 2, 3, 4, and 5. And essentially that 5th wave, it might have had a little bit of a 3 drives at the end, which is called an ending diagonal, but regardless, it played out really well. And then we come up to this one here, right? Everyone sees this big juicy one, right? And it's like 1, 2, 3, 4, and 5. Very clear, very proper, and everything, and it only comes back to the 4th wave. You know, barely managed to graze the 2nd, and that's when it kind of started. Is we had a little bit of this action. We had a little bit of this action, and then it spiked down, and we were seeing that, right? But then the trend broke, and that was the trend from the week before. And as soon as that trend broke, look what happened. We went 1, 2, 3, 4, 5, and it couldn't even make it through that 4th wave. Still to this day, this B point remains untested. And then, like I noticed, again, we did it up here, where it's like the audacity to run all the way up, right? Look, 1, 2, 3, 4, 5, and it only came back to the 4th, which is unbelievable. Because look at all that movement. And then what did it do? It went 1, 2, 3, 4, 5, and only came back to the 4th wave. Look at that. On that rising wedge, decided never to come back. It just ended up going up, then sideways, then up again. And you can see that basically it made 5 waves and decided to not come down off of them at all whatsoever. And still to this day, all of those levels, unbelievably, are still untested. And we have more 5-wave moves that have just decided never to play out as well. 5th waves that just run into the sky. And I want to point out now that things are a little bit different. It did make a 1, 2, 3, 4, and 5, and ended up coming all the way back down. So we got a little bit of a mix here where 1, 2, 3, 4, and 5 ended up not really affecting it much. So it's like we're seeing more of them affect it now than ever before. And it was just very clear that, you know, it was very dangerous to play the 5-wave moves on these runs. Yeah, it's absolutely crazy how many times 5 waves have happened and they haven't come back past anything but the 4th. So basically, the idea is if anybody manages any kind of hedges, or if you're in any kind of hedge trade, any trade taken from today is now going to be overlapped by the hedge trade. And that's not a bad thing, because you want to
to manage a short on today because there's a risk that it does have a comeback, drawback. And at the end of the day, it allows you to have ammo to be able to capture a long hedge where you otherwise wouldn't be able to justify taking a risk. Like if it creates a falling a knife environment, being able to catch that because you're short is significantly easier. Like if you have, the equivalent of 10 from the top and you're hedging with 5 or less, significantly less risk in just going in with 5. But just as an example. This trend right now, it's breaking. It is the trend of the moment. And I can see that we're running into the VWAP. Ultimately, this is the final downtrend. It's the current red-yellow line. Of course, we can't get back to the other one without breaking this one. It doesn't have to be incredibly urgent, but it is the line that until we break it, we are undeniably within a downtrend, and that is the downtrend, and downtrends always break up. So, like when I talk about a downtrend, I am only ever interested in its reversal, not ever interested in continuing with it, unless you're already in from the beginning of it. But no halfway through the trend kind of trades that allow you to be in. Like, if the market on average makes, let's say 70% of every single move it makes, it manages to pull back 61% of the time. So if you manage to buy anywhere from here on in that move, you're late. And I think that this is late too. The best place to buy it is while you're still contained within this last trend. And capturing that exposure allows you to be in for the reversal so that you capture the entirety of the new trend, not just like half of it or something like that. Because it actually makes me feel like grossed out when I'm not in from a point that's satisfactory. Like I know that it's subject to being overlapped in the next retracement. So by default, the attraction can't be to when the market has already broken the trend, but the attraction is to when the market is about to break the trend. We look for things that can insinuate the need to break the trend. And the time that we have until the trend break can basically show us, it can tell us a lot, how much movement it has until the trend break, how much it's capable of doing. If it doesn't have much room, well, we're that much more likely to be responding to the trend soon, because it has to exert energy in order to stay away from it. But if it doesn't have space, well, then it's going to, by default, be a lot more likely that we're going to be associated with that trend in the near future. And that's like logic that I find that many individuals that are just trading on ETFs and stuff aren't considering. Yet it's like very black and white to me. Must be considered before taking action. Because I don't find comfortability until I've checked the things that lead to a mathematical probability of it following technical analysis, even if it's something that's been doing very frequently. Like you want to make sure that you check all the boxes before you take a trade on it. Yeah, it's like at the back of my head, I've got my future self calling me negligent for not checking all the boxes, and I don't want to deal with that. So I just check all the boxes. You want to make sure that you follow every single rule, and you want to hold yourself accountable to the best of your ability to make sure you do that. Because it's hard when you've got the autonomy to
work for yourself. It's easy to make things easy. And you don't get good by doing that. Ironically, as a very, 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 very like bold sentence, I suppose you could say, it is true. You know, it's good to make sure that you have awareness of everything that you're doing as well, and that there's no hope associated with it, because when you hope, you lack control. And you can see how much control I have, and I'm like, well, as soon as you give it up, somebody else is taking it. And I mean, like, why do you choose to take action on a time where you don't have control? When you know that there's scenarios where you do find yourself comfortable, why not have the patience to wait for them? Because we know that even waiting for them and trading even just the smallest size contract, you know, just to take part in whatever move that is. I mean, it's not stock trading. It's not like you're taking 3 or 4 shares of QQQ here, you know, making $10 or something. You'll still be making hundreds. So it's 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 not like you have to fret about whether or not trading well will pay you. You know, it's like it's worth being patient no matter how long it takes, you know, so. And it's not like I speak of it like it takes forever. It doesn't take forever. Maybe today it might seem like it's taking forever, but the morning certainly wasn't like that. And it looks like it's certainly picking up in volatility now towards the end of the day. We're at 12:30 and looking pretty good in candlestick size now and movement. It's getting a little bit better than what it was. We're not confined as much to a tight area. So change, you know, undeniably is can be analyzed, and we can see we're running back into that same node that we were using all day. Everything outside of it has always been wicks and spikes back to it. As quickly as it's left it, it's always come back to it. You know, facts like that I like to understand. Because if it's true that while we're in this range, it comes back to the medium point as quickly as it leaves it every single time until it's over. You know, it's only over once. It only leaves the range once. Every other time that it's in the range, it comes back to the middle. And I'm like, well, that's an interesting point. So let's say, for instance, you've taken it back to the middle 4 times and then it leaves on you once and you actually lose money. Are you going to lose more on that one time that it leaves than you've made on the 4 times that you've taken it back to the middle? How many times has it returned back to the middle? Can anyone even tell me at a quick glance? So many times that you can't even tell me how many times it's come back to the middle. 4 times is reasonable easily. I could say there's 4 times that happen in here. So I'm like, how many times does it come back to right there? 20 maybe? Like counting all of these little movements and everything. Easily more. So I'm like, just basically outlining the facts here. And honestly, not many things have been very attractive in this range because everything has just amounted back to the middle. If you have exposure from a distance, patience becomes the easiest and safest option. And when you get yourself into a situation where you've got your stop and profit and you've got that safe exposure, that's when it's great to pop open another account. And you have you know, it's just a matter of time before your uh, contracts move into play on the other accounts. And while it's doing that, trading the short-term range back to the middle on another account's more than a worthy ideal. Levels like that right there, they give me deja vu to this one here. How we kind of did that. There we go. Trying to think of if we're duplicating something we've already done earlier in the day. You know, like I can see that there's this here, and I'm like, all right, we've managed to make what was like a falling wedge, right? And I'm like, well, it's kind of very similar. The distance that we made on that move is very similar to what we made here, but if it's associated, let me think here. Well, I can tell you one thing, that the distance that we had on the bottom here, it's seemingly very, very similar to the distance that we had on the top. And I can't help but notice that when I look at those distances, I can see that there is a triangle here. There is a triangle here. Both of those triangles, uh, I do believe that they actually have a lot in common. They're the same size. Separated by a move that essentially the one thing that I like about seeing this is that it insinuates that it's finished. You know, this is one way that we ironically can make a 1, 2, 3, 4, and 5. It is 5. Like this, undeniably, as strange as it may seem, this is how the market has chosen to make 5 trends and break every single one of them. Now, of course, we all know that making 5 is really important. You know, we can go 1, 2, 3, 4, 5, like we all know is an Elliott wave, impulse wave. We can also go 1. We can go 1, 2, 3, 4, and 5, which is 1, 2, and 3 consecutive highs. It's also 5. You know, the point that you're meant to do something is 5. No, 5. And it's the point where we get the most risk that there is the biggest change. And an interesting perspective. And like even what we saw up here, undeniably from the low, was 1, 2, 3, 4, and 5 until it broke the trend. The most significant trend break that it did have was one that was off of 5 other trends that decided to break. Now, very similarly to a head and shoulders, I mean, what's the difference here? We're really making 5 moves in order to break the trend, and how they're associated. You know, when we end up doing crap like this, that doesn't really fit a head and shoulders. It doesn't really fit a 5-wave move. It's just absolutely, you know, it's a monstrosity, really. The idea that it does this and gets away with it. But you look at the components, and I mean, it becomes the fact that it's not 1, 2, 3, 4, 5 that really matters. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 that really matters. It's the fact that it just makes 1, 2, 3, 4, 5 in general. And when you do that, what happens every single time that we've made that 5th wave? We can connect trends that otherwise wouldn't exist without them. And is it not true that in every single sequence that we have here on the 5th point, that the red line is in major danger of breaking? So it's like, well then, if it is a fact that 5, regardless, seems to be threatening the trend, because it's not anything proper when it decides to do 5 like this. So if it's just the sake of doing 5, is that all that threatens the trend, not actually printing out a pattern that
we're all familiar with that just so happens to be a 5-wave move, but 5 in general. You know, because 5 in general does give us those trends where in many cases 1 and 2 won't give us that same trend. Like let's see what happens if we just connect 1 and 2. So like this is 1 and 2, this is 1 and 2, this is 1 and 2, and this is 1 and 2. Interestingly enough, look at in all of these like rough schematics, anybody that tries to get exposure to the blue ends up getting knocked out. Now you want to know what's funny is like the the trend that gets the threatened next is the red from the end. Now the people on the blue line don't really get threatened too much in a head and shoulders, but in every other pattern it seems to be the case. So it's like the blue one is a preliminary break. It's not the actual break. Like the break that happens first. And this is the old range that I posted in the morning. This is basically like it's getting a fake break. I noticed that blue line is really getting some action. The 61's really getting some action. That is a high volume node in there too. Could easily be interchanged for the POC. If I scroll out a little bit, it is the POC. That's the point of control. The heaviest volume area, and in terms of price level, than any other level.
Salut à tous, c'est Artix.
a little risky playing the range, to be honest, so beware. We are on a third drive, and definitely monitoring the progress of that. You know, this pattern, it happened here before. Everything from the starting with the big spike. That's the first point, second point, and then we had a halfway retracement for the for this one. Is it not suspiciously particular that we literally did this move first, and then we came back into it halfway, like we came into it halfway. So, and I can see here when we made that big spike right there, like we jabbed back into it roughly halfway. I see that. It is a fact. This is the third drive, playing back out to the first of the three. We did do that. So it jabbed up pretty decently and cleaned up every single low that it had inside of that environment. And it is doing the same now. Of course, anybody with a stop at the extreme is still unthreatened. Curious to see if they manage to make some wicks and spikes out of the extreme of this old range after all. I think we are getting closer to the end of the consolidation than the beginning. And like I said, you know, we could be interested in actually wicking and spiking, yeah, out of both sides evenly, which could take time. Going on in terms of events, because the movement that we have here now is 2 days from now we got a Powell speech. And the day after as well. Just remember that when we do 5-wave moves, right? It's the third wave that typically is the largest, and it's not in this case. But when we make 3 drives, we are notorious for getting back to the first of the 3. So if it looks like 1, 2, and 3, or 1, 2, and 3, you know, coming back to the first of the 3 of them is what we like to do. Now the thing is when it's like, well, oh yeah, 1, 2, and 3. It's like, well, what do you mean first of the 3? There's barely any freaking movement there, right? So you know, you might think, well, that's barely even worth it, and that's what it did here. I mean, we can see that when it originally made 1, 2, and 3 here, all it gave was the first of the 3, maybe a little bit more. It got held back by that POC, perhaps. But something tells me that we will see that POC again. It's just going to be made difficult for the people that want it. And that's okay. It's just you know, looking at that pattern, what was it capable of doing? Well, it's a fact that we went down into 3 consecutive lows using this movement right here. And when we did that, we took the entire thing and doubled it down. Now, what that would look like if we did that with this movement would be a hell of a lot more in doubling it down. Look like a 188-200 down there. Well, of course it's doubling it, so of course it would look like a 188-200. But at the end of the day, it's it is the case that, you know, we're basically back up in an environment where it could suggest on the longer term, like the hourly, that we could be making a right shoulder. You know, like, or maybe not the hourly. It's a bit much. Like something like the. Check out the daily. Yeah, like what we could see here, all right, is a head and shoulders to an inverse head and shoulders. Overall, I don't know if it's gonna let me draw on this. No, it's not. Let's see. After all, this is a little hectic. We can take that off. But this movement right here at the end
we could get a left shoulder, a head, and a right shoulder. Maybe it doesn't have to be that deep. Maybe it just has to be to here. You know, because it's true that, you know, we would identify this pattern as an inverse head and shoulders, no? And is it not true that I have an argument for this being a head and shoulders? Is that the same thing except upside down? Now you want to know what's funny is this and this actually are together. Like we look like that right now. Like if the Nasdaq was a line graph, if I made it into a line graph, that's what it would look like. But yeah, but I don't think I need to do that to show everyone. Obviously, we can see that it is the components are there. And I'm like, well, did you know that we did, as a matter of fact, make a rising wedge here? This is a bearish pattern, and it ended up going up, right? And like, well, to our favor. But the thing is it left a blue line right here, long time ago, right? Long time ago. And like, no matter how you spin it, it came back to hit that level. And effectively, you want to know what happened with this? They took this spike and put it here instead. Because there was no UT. Did you know they didn't make this UT here? They never made that UT. Never ended up doing the UT. But the UT was supposed to be a severe threat to anybody that had the SOW. We know phase B can be brutal. I mean, obviously this is a point people were going to be interested in shorting it or maybe hedging it. But at the end of the day, one thing that's intriguing about this is, you know what UT does? Oops. What UT does that it was not able to do is it took this environment, which was like a little trend like that, right? And it kept it. It took this movement and it put it in here. It didn't break that trend. You know these two highs, the BC and the ST? Well, they're here. They were never tested, they were never broken so that it could make that UT. And that's just like, you know, yeah, it's a fact that phase A was really accurate. It's also a fact that, you know, we're still contained within the support and the resistance lines of the entire area. Are we still doing this? Oh yeah, we could be. At the end of the day, are we interested in making this spike the UT? At the end of the day, what is the likelihood that we end up doubling this range on the break of the trend? And what is the likelihood that doing it off of a head and shoulders to an inverse head and shoulders could really make it happen? And there might be a little bit of an extra move in there, but that's okay. You know, even on the schematic itself, many will not notice, but it does make a head and shoulders to an inverse head and shoulders on there. And it takes this movement and puts it out of here. Interesting.
know, why I like that is because it's a fact that I did take the middle bar. It was the same distance as the upper bar. It was the same distance as the lower bar. So. But yeah, as a refresher, you can't think about the 4K pixels. So I have to post it in a non-4K mode. The head and shoulders to the inverse head and shoulders is an exact portion, same size as the portion that it leaves in, and same portion that it uses on the original one. And in this case, it makes me question the movement we have in the middle here. And at the end of the day, if your positions were flipped from being long intraday today to being core short, capturing the long back as a hedge, you're going for it to turn into the core again. But if not, then you have the hedge originally. It's good to make sure that you keep control of the extremes. Right now, I can't help but notice that it used the exact edge of the green zone. And also a major thing as well is the spike that we have here. Very similar. And doing that today, you know that sequence of making this large spike and having this large spike? putting a move at the beginning and the end, it's like this is how it's chosen to do 5-wave moves today. Because did you know at this sequence point right here that we're at, it creates a trend that it hasn't been able to create otherwise. Like this can be connected here. Like ironically, what we're on could be like a 5th wave in a very strange way. Like we would usually be familiar with it like this. So strange. Like why does it want to be so different today? But I'm like, it's not like it's being different and being more effective. It's ultimately just returning back to the range. But I did mention early on that it wouldn't be easy for those trying to capture the trade, and I mean, it gives me deja vu to the to some of these last environments. How did they make it for the people that wanted to be in for the sideways movement and for it to continue up? Well, they seem to allow everybody to short it and stay in, and relatively stay in, till the very end moment where everything was basically blown out. And for the people that wanted in, it made it very much difficult by coming back nearly 95% of the way, and then again and again, and after all that waiting and doing such a good job, all these people here, right? They just came back for them. And then if they came, if they tried to get back in when they got out, they got them again, and then just wiped them out altogether. And a lot of people would quit after that. You could see it. It's just like, wow, that experience for a lot of those people that tried to find value in buying already high, they must be really convinced to keep trying at that point, right? Because it's clearly not working the entire time that they've been doing it. To continue at that point, they must really want to be in, right? You could think. And I'm like, well, what is it to somebody that's holding? I mean, it's just another consolidation. At the end of the day, if you're hedging from the high of the consolidation, trying to catch the bottom of the node, try and take profit as much as possible at the bottom of the node, that's the safest position you could be in. But if you've captured a short, you're otherwise safe in that short, the name of the game is to try and find a long against it. And if it actually falls off, you can, make a decision to actually use more on the core, depending on if you're satisfied with it. Like if it comes down and actually makes a right shoulder, why would you give up this short? So keep the short for the entire dump if it wants to make one. And the entire time you want to be in for the right shoulder anyways. It's going to be that much easier to capture a position if you have the short. So it's the same thing that we've been talking about, where when you go short, it's that much easier to do it when you've got a long trade, and if you've got that long trade backing you up, like you've got an NQ, what is it to try to take a 2 MNQ short? If you're wrong, then so be it. You can afford to be wrong with it, right? At the end of the day, it's only 20% of your position. Now, if you make something on it, you might make an extra 50, $100 or something. Now obviously that example is just using 20% of the position, but it's less than half. So you'd have to lose 5 times at the same level to make up for how much you're making on the NQ. So it's like really something. So like you can actually get your feet wet in the game when you have that security of being in on the NQ, and if you know it's going to be a crappy range, you can potentially trade it, but so there's nothing like being in from the extreme and just waiting for it to come and knock you out so that your core can continue. Everybody else is put into a position where if they were long, this consolidation is likely to knock them out. They're likely to wake up to a nice profit and they're going to think, easy to take profit, what a good day. And then they call it quits because it's easy for them. At the end of the day, the institutions don't have the same luxury. They can't just exit those positions without like taking huge hits. They have to manage them. They have to become better. And that's what we're up against every day. So, I recognize this. I respect it. Huge. You know, it takes teams to be able to manage that kind of a account. So.
Ok les amis, on arrive à la fin du set. C'est le dernier morceau. On finit avec Rock Block Remix.
Ironically, I think that what we're going to manage to do is come back to the tip of the triangle by the end of it all, but what we're interested in doing, I think, is getting ready to make wicks and spikes out of the extreme of the channel. And I'm like, well, what did we do when we did it last? Can we do anything similar to what we've done? And what's the likeliest way that they can get the most people to provide the most liquidity possible? Well, to make them go long at an area that's otherwise provided value the entire day, and then stopping them out could provide the wick and spike, and then we replicate the wick and spike on the other side of the range, which could be very, very intriguing as well. It makes me think about what we've done before coming into this area, and you know, like how many times have we done this like large spike, right? You see how we've done the large spike here, and it kind of replicated itself again, and we did a large spike here, and it kind of replicated itself again. You want to know one thing that's interesting about this is we've done this spike here, you know, a large one, and never replicated it. But one thing that I find that's interesting about that is each time that we manage to do a replication of a previous spike, it's able to go lower. And just like a falling wedge provides downwards movement that gives us the opportunity to plot downtrends, which in every downtrend in the past, or every falling wedge in the past, the only way to get to the target of the pattern is to break that downtrend. So, very intriguing. Now I want to point out another thing here too. So, when it does make 3 consecutive lows, I'll give it one thing. It's very good at coming back to test the first of the three. And it doesn't matter if it's already made 3 lows or not, but if it has 3 lows, then the third last low is subject to getting hit on the next trend break. So that's like a major thing. So I'm like, alright, well, could the spike out of the bottom of the trend lead to the first of the three? But this is the kind of range that reminds me of the ones that I say it either takes patience or persistence. And ironically, the one line we want to be in for is going to be this one. It's miles away. Like, it's totally a today thing, but it's not anywhere close in this. Like, if we ran to it in this minute, it certainly wouldn't hold. Or it certainly would hold, sorry. Yeah. Because, like, I mean, if you exert all of the energy to a level like that, you know, we won't have any to break it. You know, it reminds me of, you know, kind of like what we did here. You know, so the next time we do this, it's probably not going to be on a quick run like that. Because every time that they try to do things quickly, look how it goes for them. And they seem to learn this lesson. I mean, every single week. Every single week, it seems to be very, very quick. And every time that it goes quick, it has more of a drawback. Every time that it goes quick, I bet you it has more chasers. And every time that they make it go quick, more and more people bite it. And what happens to those people? Well, when we make new lows, they get stopped out. And what's funny about that is we've barely made much progress. You know, this is the most progress out of the range that we've really made. But if you think about how much progress we make from low to low, it's not much. Now that raises another question of, is this a major third consecutive low? Because I can see that when it was a third consecutive low here, it did come back all the way up to the POC to clear itself. Now, ironically, the next one would be here, here, and here. So obviously, in order to get to that last low, it's gonna have to break a trend, and it's gonna have to get to it to break it. Levels like the 188-200 could be seen. I mean, we were talking about the 188-200 earlier. The idea that, you know, we could double the range and get to it. You know, there was a risk that this movement right here provided the same kind of risk that that movement right there did. Now, what's interesting about that move right there is that this managed to double, like more. Like, it was very good, right? And I mean, that was like the biggest move, like the biggest part of the whole thing. Like, the whole thing doubled, right? So if we did that same thing here, it would be way out of proportion, it'd be way out of our range. But it would be down here that it could go to double this whole movement. So it's just an idea, a perspective of, you know, when we coil up like this, it's like when you take like a like a spring of some sort and you coil it up a certain pressure. Like, you can put your hand on it and push it down really hard where it's got a lot built up, and then it'll spring far when you lift your hand off. But if you you know, you know how much pressure you put on the coil is going to change how much energy it has when it's finished coiling up, right? Basically. And when it's in the act of coiling up, like when it's in the act of making it like really tight, crappy environment, um, this is one way of it doing it. We can analyze that, okay, it was in a confinement area when it was doing that. And as a result of it being confined with this much pressure, it produced that much. Now we did this again and was confined by this amount of energy, and we did not double, which is a fact. Well, not yet, but But what could it mean when we do? Now, I'll tell you one thing. Do you want to know what it meant when we did? When we did double before, it managed to retrace nearly the entire move instantly. And I'm like, well, would that look like this? Because I mean, it's only like appropriate. Would it take back most of the move? I think it would, yeah. It would. And it would be like this one. Like it would be it's kind of hard to explain, but I can visualize that we've managed to make this big spike before. And when we make that big spike, it translates into another one down below. We did it down below. Like this spike right here that we had in this movement, we managed to produce again, basically. Okay? You know, the same size movement is there. I mean, I'll give it a break with this. And essentially, I can see that the value of it being coiled up that much was to be able to produce a move that was of similar size to the move that started it, is my point. And could it be the case again that with a larger pattern, exactly the same components, you know, like from the large triangle coming down and then making a halfway move, you know, like we did this little halfway move right here, we did it there too. It roughly cut halfway back into the big triangle. And I'm like, well, did we do that yet? I mean, could it be that when we do this, we could visualize it like another triangle? So like when we had this larger triangle here, did it make a smaller one like that? So after all, it totally is doubling in size, and it is at the 188,200. There is a gold bar that it has used not so long ago as a pretty substantial resistance barrier that caught a little bit of attention. But why do I think that this is important? Well, you know, this has been a thing since we started this trend. You know, you could say that this is the way that it is trending. This is what it does when it wants to make a progression. You know, until it makes this coiled up like movement, well, we can't move like this. You know, and what do we do with consolidations when we end them? We double them at the minimum. Remember? So at the end of the day, we double them at the minimum. And we had a sneak peek of what this one could look like. Now, funny enough, in order to make the same retracement that we did here, it would actually honestly look like the POC again. Like let me see here. Like, is it not true that when we did the last pattern in the past, it came all the way up to the 78% retracement from the point that it started? Well, if we did a 78% retracement from, let's say, the 261, what would that look like? You know, it would look like here. Huh. Thing. I just wanted to get a perspective. Now, of course, we are coming back to do an absolutely insane retest of a untested line. The 261 is getting its first response right now. So a good point to consider taking some off if you have any hedged. And it's a good point to consider hedging if you don't have a long position. It all depends on how you've positioned yourself, right? I mean, if you did hedge down here, you took anything, this is the ignition candle. It's important to make sure it's safe. You take it from the 261 to the 227, I mean, there's plenty of room for profit in there. And to make it safe, because I mean, who thinks it's not going to see the 261 again, and why? Because if you found a position, it's good to make sure that you protect it when it gets up to that level, because it can see the 261 again. I mean, I guess it doesn't have to, but when it does 70% of the time, it's good to allow it to. Because why would you go against something that happens 70% of the time unless you have reason to believe it's changing? I mean, if you have reason to believe that it's changing, that's a valid reason. Don't discredit it. You know what I mean? It's true. It's true. I mean, if you can say, well, I have a reason. I mean, it's a reason. So that reason would hold potentially. You know, unless it's a bad reason. You know, so at the end of the day, if you have one though, it's worth considering. But otherwise, it's good to understand how to make it safe and why to make it safe, or else it's uncomfortable. And you want to know the thing that deters me from holding in levels like that is when I can see that there's so much space. And I was like, oh, there's so much space before. Look how it turned out. It clearly, you know, made more space. And now there's even more space. Now we can go sideways from this at this 261 for potentially 15 minutes if we wanted to. And what would it change? Well, we would get closer to the downtrend break and it would develop momentum. We're at the point now where I would think, okay, that the momentum that we generate on the short term now is going to be favorable towards reversing. So the more sideways we go, the more impactful that momentum can be on all the different time frames. So, I mean, okay, first of all, how do you think we could change the long-term momentum in the next 5 minutes at this level? Well, one way that we could do that is by going up to test the 188-200. Now that's a really good target in the short term. The 188-200. Because look, how did we treat this level? You know, were the people that bought at this level effectively treated well? No, 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 no. But I believe they'll get their average price back. Quite a good move so far. Good to make sure it's safe if you did take part. After all, the 188-200 is getting some pretty heavy attention here. Having some orders ready to rock on it as well is not a bad idea. And stops aren't safe above the high of the red candle down there. Of course, there's like a little B point in there, so no stops are to be dragged above it. Of course, what does this kind of move make us have that we otherwise wouldn't if we didn't have it? Well, it gives us a new trend, and it means that we could potentially be making a W. In the event that it wants to come into some sort of H-like pattern, I'll tell you one thing. We've already done an H like I guess we've done a few, but none of those H's that we've seen up here ended up working. Now, where do we see that happen? Well, when they don't work, and we have another one of similar size, it may too not work as well. But if we have the case that it's a fifth wave, when it's also failing the second one, does it not create a trend that otherwise provides opportunity in the event that we're exposed to it? A small minimal area to analyze for the reversal? And that's why it's so attractive. And if there's already something in the way of the fifth wave, it can be even more attractive.
What wave is this, John?
In this case, yeah, it's looking pretty crazy. I wouldn't say that it's really part of any kind of wave, but if it was, I would say a fourth. It's like fourth wave territory. like separated by the only move that could be considered a third. That's why I would say that. And it's also the same size as the last counter trend pullback, separated by the largest, which is like the same components as a 5-wave move in Elliott wave terms. Because it's like, well, we might not have had this movement exactly the same way, but it seems like we have at least this part of it right now. Maybe a little bit of downwards movement. So I'm like, well, these components insinuate that it is near the trend break that will get us back to this point right here, and that's the new B point of interest, which is also the green zone. And I guess it does have a blue line here as well that I could put in, one that's of more interest.
See, the ATR's kicked up a little bit, a couple of points.
Yeah. Oh yeah, this level right here. This level is the one that I think that very likely to try and get back to.
The blue line, yeah.
Yeah.
Yeah, it makes a lot of sense.
And it could look honestly like the 188-200 when we get to it as well. It could be on a W. Take time because it's got a lot of space there and it's got a lot of time. The gold bar that's here was controversial in the past, and it continues to show its value. That when we can run, very significantly for a prolonged period of time and generate one of the largest moves off of that level counter trend move, and then when we passed it before, we had a consolidation and we stepped on top of it, and it held pretty well. So again, I can see that we've put a little bit of a consolidation on the bottom and a little bit of a consolidation on the top. The predominant part of the node is at the 227. I can see that if we made that small spike out of the top of the consolidation, it may be exactly enough to get that 188-200. And regardless, like making that movement, we could have a negative response to it as well. We have to watch out for that. This line right here, it could have some
sort of negative connotation to it before breaking. It's not like it's not going to break ultimately, but one of these lines is going to cause some trouble. And the trouble could amount to it making a secondary low. So it means that when we get to the 188.200, of course, it's good to make sure that you know, enough is secured if you haven't already.
Yeah, I don't anticipate the longs lasting long here because if you look at the hourly, we're definitely coming down.
Yeah, I think like that double
Uh,
bottom factor is going to be on the table here. But take a look.
the RSI, yeah, and
I would say that it's about to have a positive response, no?
well, wait until that orange line gets down to the green line, we'll see. But
Which is like
it,
right there though.
yeah,
I,
yeah,
I, I think that
hasn't
if
touched it in a while, Hasn't really touched it in a while.
no, it's true. And if we went honestly sideways at this level for like what time frame is this? Oh geez. If we went sideways for if we got another candle, there's a chance that it could actually hit that level, you know. Like it kind of morphs a little bit, but I can see it. It wants to reach for it. And I think having that positive response could get us right back into that blue line. Kind of like what we did here, where we were reaching, and then it was like snap, and it went all the way back up at that point.
Yep.
What happened right there? Yeah, at that time it had a pretty decent reversal on the hourly. But there's been other times where I can see it's been coasting along here, and it did that characteristic snap down right after it was going sideways for a prolonged period of time. And at the moment that it was snapping down, it may have even been touching. I'm not sure exactly, but because it reversed so hard, that the short term orange level can get dragged up so violently that sometimes it doesn't even look like it hits. Or there's even a case on long term levels like this where it can go and hit it and then retrace back up to the exact state that it's in right now, and it won't even leave like a recollection of hitting it. Like it can actually go down and hit it and return back up without it kind of changing. Like you can see it's moving right now without actually giving any time. Like that small of a fluctuation could be down to the green line and then back up, like smack and then back up. And that could be something like a short-term move that looks a little bit more drastic. But in this case, the 188.200, it's really important to make sure that everybody has some off there if you did take some off. And obviously the white dash line is or white and blue is the next one. You can see that the 261 led back up to the 188, and it indeed managed to do that. I'm just curious about this one too here, because I remember checking out the dollar last week there too, and it responded to a really important level, which is really kind of interesting there. And
And I've been noticing on these big fib sets, 161s a lot lately. So it's no strange thing that the bigger fib set amounted to a 161. And what that honestly, like, how many times do we make a consolidation? We take the consolidation and go out of it, right? Double it. I don't care what way. But how many times do we end up on the other side of the original? You know, so either like this or like this. So ultimately ending up doing something like that, or doing something like this. And what does that mean? You know, we do love it. Like, look at this one right here. Oh, geez. Can't help but notice, like, literally, it almost looks like it tried to. Let me trace that over real quick just so you can see. So it's like sideways, clearly. And then it clearly went down into that sideways. But what did it do after? It produced the same amount of downwards movement to the upside, maybe a little bit even. You can see that it felt that when it did that, and it came almost all the way back down to the median point before continuing. So I'm like, well, what about this being sideways, this being down, and that being the up? What about taking this entire movement, which seems to be pretty clear in that area in the middle, putting it on the top? You know, like, let's take a look at our volume node. Like, is that the same amount of volume? Did we double it down and return back half? And these are all really important questions that you can find out answers to by measuring it and essentially seeing whether or not it is, you know, like, as a matter of fact, since we made this trend, where are we now? We're at the 38% retracement. We are at the blue and white dash line. And effectively, whoever moves the market like this found value in rounding everybody up in the consolidation and then essentially stopping them all out just to return right back to where it began from without the people. And it's like, where did their positions go? Oh, to the people that move the market like this. And that, I just can't help but think, I'm like, where else does it go? Are the people people, you know, responsible for all, like, ganging up at 11:13 and deciding to move the market so precisely back and forth to not effectively move in the same direction? Like, if you're in any one individual and you have the ability to move the market, don't you think you would keep it moving in the direction that you wanted it to go? But why would you could choose for it to overlap existing movement? Who's that good for? Because it doesn't seem to be good for anybody that wants to go for big moves or nothing like that. But at the end of the day, we can see that there are some characteristics in this environment that are very, very clear, and I just want to go over them all. The first one was this thing. Where do we see this before? Nowhere. But we had to figure it out today. So at the end of the day, it made this large spike and then it had a small one. The two components were very, very clear there. There was a support line. That was our blue and white line in the past. Literally. And this was a method of being able to double down and return back up and even put it back on the other side. So what are the odds that we actually continue the sequence and actually take this movement, you know, that's formulated itself here, that's managed to double down, basically. I'll give it a break. You know, and after all, it's got all the people obstructing it. And after all, the idea that it makes the same kind of sequence where we double the move and return back to the middle, and then ultimately to get through the middle. But this time, I don't think it ends up making new lows from this point. This time, I think it goes for the red-yellow line. This time, I think it goes through the red zone. And I mean, not easily. Not easily. Like, who thinks we're going to get a grind on the green zone? Is it appropriate? I mean, of course we could get one. I mean, after all, could we do... What about the way we do it now? It's not just a grind anymore. We hit it twice. we come at it hard once, and then like half as hard again, and then we come in for the grind, and sometimes it needs a step. And when we're done all of, okay, and this step right here could be the break and retest of the red yellow line. Didn't think about that. And the movement down here could be exactly what's required on the other side. Kind of like, let's look at how it's done it in the past. That was really violent there for sure. But it kind of hit it hard. It stepped back pretty decently. Oh my goodness, that looks exactly like what we did here. Let me just pull this over for a second. I'll use the bigger one because it's clearer. But they're both the same thing. Is it not true that in this environment, I know this first move is really deep, but it goes up once, right? And that's the fact of the matter. You know, in order to be able to get to this high, and it has two peaks at the top, and that's what it does at this point here. And then after that, those moves, it dumps off, and it did that here, and then it kind of does a halfway move, you know. And sure, it went a little bit more where it slacked, it added, and effectively we're still trend break for trend break, like up, like this kind of movement exists in here in a strange way, except it's just drawn out a lot more. And this movement right here could be considered exactly like what we've had here. Now, what's funny about that, right, is because what's funny about that is we actually have 5 from this point. You know, like one, same goes for this. This is probably how I should have originally explained it. But yes, the 5 that we can see here, undeniably in sequence of trends. We start with everyone moving in sequence and breaking trends in order. And that's how we dealt with the green zone. And I mean, maybe it's just like I was going on to explain earlier how there's a few ways that we understand 5. Maybe we needed to understand more. So 5 waves can be, in other words, very common, but to not understand this today and to only understand these would be a disadvantage. Now, what's funny is like now that it's been kind of choppy and contained the entire day, we can see the candlesticks are increasing in size. We can see that we're closer to this thing than we ever have been in a long time. So we have to understand that it all originated in this bar right here, and it is all likely to end with it. Well, it is going to end with it breaking. Could we be in a 5-wave move right now that ends up reaching on its 5th wave? Because undeniably, when I mentioned this earlier when we were in this consolidation, every move we've ever done out of this node has come back to it as quickly as we've left it. And are we doing that right now? Is it not true that everything that we've ever done outside of the green zone has come back roughly as quickly as it's left it, and cut it a little bit of slack? You know, it's like it takes the elevator down and the stairs back up, but roughly, you know, that is a spike. Like how I could prove that is like longer term time frames. Like look at the hourly. That's a wick. The entire thing was bought back up. That's the half an hour. Whoops. That's the 15-minute, you know, 5-minute. Literally, it looks exactly like it was bought right back up. You can't really tell the difference. So it's totally a spike. That means that every single seller was bought out as quickly as they sold off, roughly. Interesting. And the amount of buyers that there were inside of this environment, when you make a move like that out of the bottom of the range, it creates a lot of sellers. Like all the buyers turn into sellers. But what this tells me is that somebody bought what they had to sell. And the people get washed out, and they're very, very unlikely to try and continue. So it's
It's interesting if you look at it from the perspective of the institutions which we know have accumulated. We know they've had a big part in this big push, and we know that they're going to be interested in having a hedge position. Because what does having a hedge position do? It secures the gains without you having to lose your exposure. It ensures that in the event that it does plateau, anything that happens against your core can be made into a profit while you're waiting. And if the core is worth holding, because it's going to continue to see new highs again ultimately, well then you keep it and you hedge it. If it's gonna be really bad, well you make more money on it. At the end of the day, if it's worth keeping, then you may decide to accumulate more when it's down after having hedged it. I mean, all of these considerations must be considered by those that work the largest firms and funds in the world. So why I choose to neglect them, right? After all, we can assume that they will move the market in favor of those considerations. So understanding them is really key. Also, is it not true that we've pulled back more than the second wave? We pull back um, back to test that 188,200. The blue and white line is a significant one, and if you can see in the past, everything that we did past this original blue line was sold back to it, and then it chopped and chopped and chopped until it couldn't hit it anymore. So coming back to test that level, like we did here before, is very, very likely as well. Yes, and of course, it wasn't this line necessarily that has the problems, it's this one. And as I said, one of the lines is going to have some problems, and this is the one. I'm like, okay, either or. We know that allowing people to take profit at the blue and white line is a lot more favorable than it not being able to break that first initial trend. Obviously, the people at the 188 were put under a lot of stress, and again, that area right there is getting a lot of attention. It's true that we have a new trend. You know, what happened here, right? Do you remember when we did a 1 and 2 and it went down? Well, here we did 1 and then 2, right? And then it stretched away from it. We can see that that was also part of a move that had a major retracement, roughly back to where this part started is where it started to retrace. Not exactly the same, but maybe not. Maybe it's not over. At the end of the day, um, I recognize that it's managed to provide another trend or another triangle, sorry, of similar. Uh, what would the word be? Its purpose is similar. It serves a similar purpose in this trend, and I can't help but notice that there are only two of them. You know, these ones in particular. You know what's really similar about these is not the distance that they managed to go, but the time that they took and the effort that was put in towards making sure that they retraced roughly as quickly as they were sold off. Now, in that second hit, right? Do you remember how after hitting it twice, 1, 2, we then had a large move which strayed away from that line really far, right? So when we did it here, we went 1, 2, and then we strayed away from the yellow line really hard. But when we broke this one, you know, it never tested. It never, ever, ever managed to test it. And it came all the way back down. Still didn't manage to test it, but I think it had a big role in it. And I consider it tested now. But I'm like, well, this one, which is also the 2 points, I'm like, they left it hanging again. But then what's funny about that is because we put so much of a chop in here, we can see that there's been a node that's formed. And if we bring that over, we can see that it looks like the gap has played a role in actually trying to get us off the ground here, as well as the 188-200 assisting it. I can see that they were powerful in working as a support in that moment. My goodness.
Also tap the just the bottom of the 15-second RSI.
Interesting. Yeah. Okay, I see that. On that pullback. But another thing as well is the move that I saw here. The one that we were just going over up here is actually happening here. 1 and then 2, and it went down exactly the same way and created a move that pulled up exactly as we do in every single other one of the schematics. And it's like this movement happened again right here. Literally. I'm like, well, that's interesting. So is it not true that we need to put that on the radar, basically, and start looking for it? If it is to be so common. And I mean, you want to know what's interesting about that thing? Is we'll be watching when this trend breaks, if it can ever even do it again. Because it seems to be good at doing it, but we've only ever seen it while it's been within this trend. God forbid that trend is the thing that's making it do it, because without it, we might not be able to see the thing that's so common in this trend. Maybe the next trend has something that's even more common. Maybe we see it upside down, and that that could be on the table. Because like even when we make a proper 1, 2, 3, 4, and 5, and it does like a proper 1, 2, and 3, like you can see that like this trend comes to an end, right? And it's like finished, it's broken. We break the trend, and then it chooses to make a new trend. But within that new trend, it chooses to use the same kind of pullbacks that the last trend had. And I guess they're not the same in my drawing, but they can be the same essentially. This was the closest we had to a 5-wave move today. One could even say that there was a 5-wave move, and that the fourth wave was just that one red candle in there. Because since we finished that, I can't help but notice that it's managed to do the same kind of move that we use to advance the market. It even did it in here. And kind of again. But when we do that, it essentially is an action that progresses the trend. And, under no circumstances has this action ever led to a new high. Never. So I'm like, what about that if we did? Wouldn't that be such a change? Wouldn't that be something? Now, I'll tell you one thing. It's kind of screwed itself in a way because it has made such a small one. And it means that all we have to do is get above this level in order to make it the case that one of these is no longer progressing the trend, but its presence could potentially be I don't want to say regressing the trend, but not progressing the trend. Like at the end of the day, it's not having an impact on progressing it anymore. It's not pushing it forward. It's not necessarily pushing against it, but it's not pushing it forward anymore. And if we can analyze that that is the case, then things have changed absolutely. And I mean, it's just a short-term movement that can tell us a whole lot about what's changing about this environment. I'll tell you one thing. None of that can change without this line breaking, and it becomes a very interesting environment for me personally because I can see that we're closer to the change than ever before. It's true we made a big spike, and that spike
could be having a spring right now. It's true that, yes, we've never tested this line, and I am incredibly tempted to readjust it, but I'm going to put a new trend in there, this one. And this is where I would readjust it to if I did. And it makes, maybe a little bit of clutter on there, but I'm interested in it being done with the relationship with this red line and breaking the yellow ones. And how it does this. Can we get into that green zone? Because that green zone, we could have another hit of it, Another hit of it. Remember what I said about it. We can hit it twice and feel it. Like the first time we hit it, we get this half-ass kind of move. Like it's nothing like this. We hit it again. And then, I mean, I can't tell you if this one actually wants to come down and test, because it could. And down and test and then break up. Only to make sure that it chops like crazy on that green zone. And I look at the time. Is as much chop required this late into the day? No, not really. Like they might be able to find that small window where they can get everybody out of the way for the end of the day, because that is their objective. I see that a lot of the moves, when I look at the purpose of them, are to go after the people that are using the easy to find trading strategies in the world, the cheat sheets and such. And I'm like, why would anybody choose for those to fail? And why are they so critical into providing volume for these big uh, consolidations or accumulations that later lead to big runs? And I have reason to believe that if people are to implement the cheat sheet strategies the regular way that they were used in the early 2000s and so on, that they would be affected negatively. And I'm like, well, why, after affecting those patterns so negatively or those people so negatively, why would it choose to move so freely after, so clearly after, so consistently, so seamlessly without these people that have otherwise failed on these other patterns? And I'm like, wow, that's really something. Because I can see that without those people, the market moves a lot freely, more freely. Yeah. And we start to see very, very clear particulars. Like I want to see it exactly back to the 188 200. The 261 holds with absolute precision. We see methods of advancement that could otherwise be said that I look at these as methods that are being imposed with intention on the market. Somebody knows that they're moving it like this. And that's the difference. And somebody will decide when it changes, and it's not just, in my opinion, it's not the masses and their random ideas that make this market move, but absolute precision that can be measured before and in retrospect. But in retrospect, it makes it very, very clear that math could have been applied and that math can be applied in the future in a same way, like this one. Like I saw in retrospect that we moved like this and then expected us to be able to move like that again in the future. And because we moved like this in the past and its result was to double, my anticipation was that we would do the same thing. And because we've never seen it before, I would expect the public not to catch on and that they wouldn't understand what's happening. But now that they have time to go back and see what's happened, the next time that this forms, it's subject to failure. Because whatever's worked the most effectively in the past is directly targeted, it would seem. And that could change. But to not be aware that that can happen is a danger. The thing that's been working a lot in this trend might be the thing that fails the most in the next trend. So it's very, very, very important to understand that, environmental changes are clear. Um, it's like you really have to beware of the environment, and you don't really get to check before you prepare for it. You have to be prepared for the environment before you get in there, and that's kind of
where I'm having trouble explaining the weather, because you could just look out the window and see what you have to do, but it's not like that in trading. You know, you don't know at the open whether or not the volatility is going to die out halfway through the day. Sometimes you get an alert that there's like, hey, there's going to be a report today. You can expect heavy volatility. That's a condition. That's an environment. You know, we can expect that kind of environment. We can expect bigger moves, bigger ranges, bigger patterns, everything. So then we can broaden our horizons to being able to understand what that could mean for trends. Like, are we going to run into barriers that are 100 points away? What barriers do we have 100 points away? We don't have any barriers 100 points away. Well, then why not? Because it's not like they don't exist. so, so I'm like, okay, fair play, fair play. It makes sense, makes sense, makes sense. I have to think about it through like that, so that you have a clear plan of exactly what you can do. And while we're inside of a range like this, it's clear that everything is contained within the red zone and green zone until we leave it. So we can understand the reality of what it could look like for leaving it, what that pattern could be look like for when we double it. Um, you know, levels that we've used in the past that could otherwise be important again. Remember when I was talking about this level and we ran into it, I mentioned that it was the largest move that we had counter trend since we did this big move. Like, we went sideways here, right, and bursted out of the top. Not another move went against this trend as large as that one did when it hit this gold bar. And when it hit that gold bar, it turned it into a support. It started as a resistance and turned itself into a support. We see this all the time when it comes down to S waves. This one's really not that proportionate, but it is true that it made this the equilibrium. So I'm like, okay, that's a fact. So I'm like, I understand that, and now I can see that what we're doing right now, it is very much like a triangle, and we're still grinding that 188 200, continuing to add volume into that area. The trends struggled to break around the red yellow line, but the red yellow line hasn't been used as support for a while. This is the first time that it has been. It is true that the B points above still remain untested. There's even a smaller one inside of the green zone. I don't think's been given full justice. As well as this one here too. I mean, like, under what circumstances did we really hit this one? I don't think we did. I don't think we did at all. And I'm going to make that one clear by making it dark. That's the big one. So by the end of it all, the goal is to get on top of the big one, to get on top of the red yellow line. And
You didn't even make the B point to this 261 down here yet.
no, yeah. But by the end of it all, it could be,
Yeah.
it could still like, honestly, we could do this whole triangle again, and we could make S waves out of the tip of both of them, knocking almost everybody out of every single move inside of that triangle, leaving maybe the wicks and spikes on the bottoms and the tops. But like, that could happen. We'd have enough time for that. I mean, like, I really don't want that to happen, but it's the fact that there's a lot of crap that it could fit in there, and it's a danger. Essentially, that makes me think that they could put what we did in the morning in there, same amount of time, uh, just for it to end up right back in the middle. Or no, it doesn't start from there. It starts from here. So like that same kind of environment, everything just right back in the middle. And funny enough, I think that it's gonna end up like this, and we're gonna come and touch this from the top. And what we did down below, and it might even be a little bit lower, like a secondary low. We're gonna get that out the top. But I question this, and I'm like, is it gonna make like a giant inverse head and shoulders here? Because it could, if it wanted to. And I'm like, well, if it could make a giant inverse head and shoulders, it's not like it's not going to be bullish by the end of it. I find that it's going to have more momentum by the end of all of this. Like, it has enough time to affect the hourly. Maybe not in our day, but it has enough time in the in all of time in general, like not just until the close, but enough time until 1800 to actually make it there. So I think we'll see this blue bar by the end of the day, I think. But will it amount to another low that keeps us in this area? Because I'm like, well, running at this point right here is dangerous because there's a gap there. If we take this staircase, like, remember before I said we want to see it slow? Well, they didn't do it slow. And every bit of the fast part seems to be overlapped. And I call that paying the price, really, because I'm like, well, everybody that runs and gets excited about the big reversal, it's overlapped. And it's like the people that had to be sweating buckets about the consolidation before it actually provided any value at all seem to be the ones that are getting like the nail bitingly close grind. And you can even see that there's barely any of them. You know, compared to the entire market's ability to trade and provide and present volume, who's this? Most of these people are sellers, for crying out loud. You know, the red there. And I'm like, for the few people that actually caught in that little area, most of the chasers or most of the public seems to be part of this chasing area. So it's quite interesting. Now, you know, with this pullback that we've made at the minimum, in the event that we break the trend, we're looking at getting involved with that node. It's only getting more and more the case that that node is going to be something of the future. Now, undeniably, it looks like the middle, the node. But I like the idea of getting back to the middle by the end of it all. People will be like very like indecisive about it by the end of the day if it is to return back to the middle. But it is true that, you know, starting the day going sideways, popping out of the top and making the largest move of the day a downwards one, has in the past been a way to continue the trend. And like, of course, our green zone and red zone could be the middle area. But in an event like this, definitely making it safe by the time that it's hit the 188-200 is really important. I can't help but notice that everybody that was part of this gold zone, there was a spike here and everything sat on top of it. What they just did right now was clear everybody out of that spike. Okay? At the end of the day, what it's done it on is a 3 drives pattern, so it puts a little bit of emphasis on this level here. I can see that it did manage to grab it briefly, so that's intriguing. A secondary low in the gold zone, though. A 261 that was remarkably precise, definitely being put to the test. A blue line as well has been formed, and it looks like we've already crushed it. It just so happens that everything was bought back up out of the gold zone yet again. Do we get a consolidation on the top of it, or do we just break every trend and continue into the blue bar above? Returning back to the tip of the triangle is also something we really haven't done on this current move. I mean, it's arguable, but it's just so crap at the bottom half of this triangle at getting back to the support. I suppose you could say that the move that it made here was an attempt at equality out of both sides of the triangle. I'm just like, that's terrible. But it's over, so it's good. That's the good thing about it. Best thing about triangles is that they end. Because look, every single thing that it did inside the tip of that triangle, is this the kind of environment that we want to find attractive? Or like already having left the environment, what did it choose to do? It chose to make a larger move than we've ever seen since the tip of that triangle. Now, arguably, with this move here, you could, like, I know it's contained within the triangle, but as it was being formed, there was no idea that there was even going to be a triangle. Interestingly enough, the triangle only formed when this trend broke. When this trend broke, it gave us an opportunity to connect this high. And then when that support line broke, it really gave us an opportunity to draw that in. You can see that as we left, everything that we've done outside of that triangle has amounted to it coming back. And personally, I can see 1 and 2 hits with a big move down and a retracement back like we've been seeing all day in these environments. This is the method of advancement, I suppose you could call it. Progressing with the trend. You see all the components are the same. It starts with 2 hits and then a big run off of it. 2 hits and then a big run off of it. All of that gets drawn right back. And now it's become even lower that, ever since we've ever made those 2 hits and dumped off of it and returned back, we've never been on top of these highs of any one of those patterns since we've been in this trend. And I mentioned that before, but I'm like, do you know that that means this now? It used to mean this. So we literally ran up as far as we possibly could without overlapping those 2 highs just to do the pattern again. But the 2 highs that originally held in here were never overlapped. And these 2 highs were never overlapped either. And I think that they will be soon enough. The staircase will come to an end. Because you want to know what it really is every single time, like, okay, let's everybody knows, staircases like that. And when we make a step in the staircase, today it is like this. And it's like this. And it's like this. And it's like this. And we've never, ever crossed this high, or this high, or this high, or this high. When we do, oh man, is it ever a big change that I can prove to you. As a matter of fact, there's something incredibly tainted about the trend. The fact that it literally has regressed past the thing that's supposed to progress it. I mean, it's a major, major problem. It's like if you're pushing a snowball, and then it starts rolling backwards, it's a problem, especially if it's a big one, So it's literally what's going to happen here. Now, the idea that we're using the kind of environment that started everything, it's also an environment that can end it. So everything that we've done in here has been sitting on top of what could be considered a preliminary support. This first preliminary support push, this first notch that creates that N wave that really sets the range for everything that we're supposed to do in a Wyckoff after. And to this point, like a preliminary support in a normal Wyckoff, this one has been working like our support ever since we've been associated with it. And it might seem like there's a lot of trends here, right? I'll tell you one thing. This trend, it was untested, and it came all the way back to test it. Now that trend was formed again here, right? It formed again with the same 2 tests. It was a smaller version of itself. We never tried to come back to test it. What a change. Is it not true that we've had 2 of these patterns now, and they've both failed to bring us to new lows? We've had 2 now. 2 both play out, one here and one here.
and they've both been contained within this environment. Isn't that interesting? You know, I find that that's something that is not pro this downtrend. It's something that is anti this downtrend, something that is uh, a problem. You know how there's a lot of trends here? You know, every single one of them gets broken on the break of this one. Like, not a single one of these trends is unbroken on the break of this one. Every single one of them is a broken trend line. Are we in the business of relinquishing downtrends? You know, because this has been a good environment to make downtrends that progress us down. And for the longest time, well, no. I look at this and I'm like, this is the longest time we really haven't managed to progress. Are we going for a record here? Because I mean, we're getting pretty close. The longest time that we failed to progress to a new low, having made the progression pattern twice and 2 times can't make a new low. Well, things are changing. I can prove it, you know? So at the end of the day, you know, these considerations are very valid on a new pattern that wasn't here yesterday, wasn't here the day before. You know, we can see on a dime that coming to the conclusion that things are really changing on a mathematical proof, something that I can actually show you, that the trend is not the same anymore, that the thing that makes this trend so great has changed. It's not as effective as it once was. And it's like, you know, back in my mind, I've got like, you know, them saying, it's like, oh, you know, imagine try playing it, you know, see how effective it is. And then nobody should, right? But it's like they will get burned really quickly trying to do the thing that has worked the most in this trend. But it's the same thing, and it can happen over and over again, producing different results. And the market wants us to understand that, because if we go against that, then we lose money. If we understand that it can change, then we have an open mind. But if we force ourselves onto this idea that you know, this pattern means it's going to do this thing, it's risky. And the best thing for today is to understand that there's a method that we move with the trend, and that thing we understood so well to the point that we can see it changing. And when it changes, we have to understand that it is a logical thing. It's a factual thing. It's something that we can't do anything about. It's something we have to change with, um, or we're in danger of the changes hurting us. You know, so the blue and white line is coming to an end, just like the red one. Like, okay, now let's talk about the red one here. You know this red one we've been dealing with for a little while. It's a terrible trend. Like, look at how terribly it broke, right? But it's working like a blue line. How I would usually have it, of course. But that red line, it was a line where, you know, we knew one of those trends was going to have trouble breaking. One of those trends was going to create a tough environment. Anybody that keeps their stops at the extremes is still safe on the first move, of course, but definitely they were put to the test. And it's like, what it tells me is that if you are to end up with the best price of today, there is no way that you can keep it to any new high that we make beyond today unless you were able to endure this pullback. Because undeniably, this pullback is not as good as this one. You might think, well, they're nearly the same, but it's true. The next time we do pull back, is it safer to be in from here, or is it safer to be in from here? Or here? Or here? Well, the higher you go, the more unsafe it is. The better it is that you are in from farther. The harder it is to come back for you. And if it's already come back for you, then it's less likely to honestly continue to try. You know, it's either, you know, if it is to be a position that is going to hold, and you have the extreme, and it is going to be the extreme, well, having it pull back isn't necessary. And if you make a hedge trade on that move, like, not to say that that was incredibly necessary there, but that is one way to endure that pullback. And let's say, for instance, you know, you're long from, you know, last week and you come into today, you can hedge it more freely. But let's say you're long from down here and you're like, oh man, I know it's not even halfway up the move here. It's the 38% retracement. We're not even at the B point and we're underneath VWAPs, let's say. And all of these reasons that you're like, I just can't be shorting here. But your position that you have is in danger. Well, maybe you don't have to take half. Maybe just take that 2 we were talking about earlier. If you've got an NQ, what is it to take the 2? Maybe you're interested in taking 5 at times like this if you're holding from a week ago, but understanding that there's a lot of risk in taking the trades, but doing something rather than absolutely nothing is an option. So instead of taking the 5, you might be interested in taking 2 or 3, and that's only 20-30% of your position. So it definitely absorbs some of the blow, because what you can make on 2 or 3 contracts on this move while you're effectively holding for 10 to continue higher is it's not incredible in comparison to what it is to making money on 10, but you will make double digits at the minimum. So, and as I say, with the end of the day, these are moves that are a little bit more prone to actually having longevity, to actually sticking, actually being part of something that does formulate into a multi-day move, because it has undeniably been hard for anybody else that wants in on it, right? And it's true. I mean, we all know the 11 low zone. It's a thing, and it happens because it works. It happens because it's necessary, and it happens because it's the way the market should move when it's doing that. And there's an appropriate time for it to do it. So we have to understand that there's going to be times where we will have to analyze 11 low zones. We'll have to understand them. Sometimes we might have positions that are exposed to them. So what a better way to make it through them than to understand every component of it so well that you can work your way through the process safely. And that's the idea. But today is undeniably slow. It is a like not particularly like a range day as you would usually have it, because it's not really stuck inside of a one range, but it will be clear that this old range from over 2 years ago uh, will have wicks and spikes out of the top and the bottom, I think, by the end of it all. And I'm like, do we start to see big spikes in the opposite direction on the break of the yellow line? Like, it makes me think about, are uh, are we going to get the same kind of movement that got us into this trend on the other side of it when we break it? Like, we've been associated with this kind of movement before. I've seen that. Getting to the blue bar as well. It's like, how difficult it's been to get into the blue bar? It's been very difficult, but do you know that doing it again is going to be from a different spot, like for forever? Like, there's no way that we can get into the blue line from up here again. Like, if we get up there, we'll be well into the blue line. So it's true that now when we get into this blue bar, it'll be from a lower point and it will have a different set of obstructions every single time that we associate with it. And in this case, there's a B point. I think they're looking to get through that B point ultimately. Yeah, it's incredible the amount of movement that we can get up to these major points where I think that the institutions are certainly interested in seizing control of the environment, and how slow and much of a battle it can be to get to these environments. It's absolutely crazy. And I think they're going to be interested in buying through the blue bar. You know, funny enough, it's like it's made an inverse head and shoulders, but inside of the head it has a B point that's untested. And that's also at the 188 200 area right there. So that level right there kind of puts a little bit of a risk on the situation. No stops are safe above it. It's like a sneaky B point in there to watch out for. Of course, it's not safe to really go for that B point, but it's not safe to drag your stops above it either. That's the idea with it. Oh wow, incredible thunder here. It's like going on for like 30 seconds. Hmm. Anyways, we've got a gap coming up. So basically, at this point now, we're going to go to a point where we can actually start to move a little bit quicker, a little bit harsher, a little bit stronger, and this will be contrary to popular belief. They want it to be on on the failure of the short traders that propel us through the green zone, because nobody wants to be buying high to progress an already acquired position. They want other people to buy while they're long from the bottom. There's no better way to have it than that way. So you must understand that it's got to be on the agenda of the big players to have the public move the market for their positions that they've acquired. Because if they move it for positions that they've acquired, market manipulation. So it's not illegal to stop out the public though. That's how we have it set up as human beings. So like all the people are getting stopped out right now. And that's progressing this trend in a way that makes it so that they don't have to buy high. And every short seller that we've seen that was part of this kind of movement, you know what just happened? We took that out. That movement right there, we just wiped it out. That kind of two highs with a pullback. You know, we're higher than that now. Things have undeniably changed, and we're back at the green or blue bar. Nothing has hit this black dashed line though, which is, I think that's the other side of the gap, pretty significant level. We could actually shoot through it too, but like I said, you know, it picked up a little bit in movement speed and
Look at the
progression.
B point too.
Yeah, it hit the B point, and it missed that one earlier too. So I like to see that that one got hit. But the big one though, the big one it missed the one, the big one I was looking at. Like, cause you know, all last week I've noticed that it was 161s. Okay, and what was interesting about it is I would see this, right? It would be really really weird. So it would go W, and it would be 161 up here, like to this would be a 161, and then you could take a fib from here to here, and it would do a 161 of that too. And I was like, okay, that's really weird. So I noticed that it would do a 161 of the small w, and then the whole thing could get a fib set on it, and it would also go to the 161 here. So like, I can't help but notice that it did the 161 here. So you know what it actually means to me? Oh, this one was a 188, but I think it's going to try and make it even on both sides, but it's been known to do more. Like, you know how we make these two highs and then dump? Well, like these two lows could be prior to our run. And like, you know how many times we've made the two highs and then dumped, and the two highs and then dumped, and the dump is always so much bigger than the two highs? Well, the two lows have a chance to actually create a run as well. And the majority of the day today has it's essentially created sentiment that, you know, it's difficult for long traders to be profitable for long, and that is the kind of vibe that they want to give out there. They want to make it seem difficult to be long in an environment that long has actually benefited many, and undeniably people that buy today are late into the trend, and they'll be subject to the next major retracement, but the next major retracement might not happen from here. It could happen from like somewhere up here. You know, it could happen from a point that's beyond the red yellow line break, beyond the daily trend break. Like, we have a daily trend. Put it on this. Excuse all the chart lines. That right there. You know, the 61 is at the POC.
So effectively, all of these trends have been broken. I can leave these to show how they were relatable to each other and how they served the same kind of purpose inside of their trends. You know, everything that we did below that level seemed to produce itself on the other side. And, you know, if that is the case with this, then we may have a little bit more of a distance on this side as well. Because at the end of the day, that was where we originally had those first two highs. They had a negative response, and it was brought back up to where those two highs were made. And, you know, even now, like on this movement here where we had the first two highs and we dumped off, like we are now effectively right back at where it originally started, the formation of the first two highs. The green zone, it actually has a gap, which is very interesting. Appropriate for a grind. It's avoided that area entirely. The area that we're at right now, it's only been wicks and spikes at the beginning of the day, and effectively every single thing that it's managed to do beneath that level has come back as swiftly as it left it. And that's the kind of movement there that I do think that we're going to see ultimately. Could be an overnight thing. You know, that also rings a bell in the event that we rally through the night. There is a chance that we end up making that distance and coming back to this point for the morning. We have to watch out for that, and obviously it could take a lot longer than that, but getting back to that point would be interesting because it would be along the lines of forming a head and shoulders to an inverse head and shoulders. Like we could do a lot out of that kind of movement. Like for instance, if we made a high like that, this is a pattern that it can be drawn a little bit easier than that. But basically, when I look at it like this, we have the high with a higher high and a lower high, and a low with a lower low and a higher low. And it starts by going sideways, you know, making that similar move out of the bottom and having that same kind of move out of the top. It's just these are the portions that factually form when we do that. And I'm like, well, we have something similar to that here. I'm liking the movement we're getting here now. This is not bad. It's jumped through the gap, the ATR increase kind of deal here. I mean, it doesn't have to increase right away, but it's an average, right? So one candle is kind of hard to really bring an increase. But if we get a continued increase, then that's great. So that's essentially the red yellow line and the arrow. Big retracement right back into the beginning of the day. The entire movement, giant S wave.
Yeah, it's just hit my VWAP that I put in overnight. Very close to POC too.
Yeah, the 61 right here as well for the whole move.
Yeah.
go ahead and just put fibs on the made a 161. 200 is the active level. I can see that this level here. That's the symmetrical triangle level right there. Let me make it more visible. So it's like we've returned back to the tip of this triangle. Oops. Curious about the old range. Yeah, this could be an interesting level. It insinuates this B point down here. That's going to be a later thing, I think. We did manage to grab the most recent B points here on this movement. Interesting perspective. So what I say about this picture is, oh, better picture, is zoomed out. We can see today's movement amounted to an S wave. Today was ultimately spent ensuring we overlapped any of the recent consolidations lows before breaking every downtrend. So it's like they can, they came, they came back to stop out the people late in the move.
And the thing is like when we did that, you know what it did? Is like let's imagine all the people that are comfortable with buying into a move that's really high. Like overall it's been running over 1,000 points up, right? And it hasn't even made like the first retracement. It hasn't even made the first retracement yet. So no spring to the spike, nothing. So anybody that buys up in here, right? What did the market do? Like it went sideways like crazy, and on this purple bar, and it ended up popping above it, making the largest move associated with this purple bar a downwards one. Everybody got to see that today. And then everybody that was associated with buying, doesn't matter if you were in from even these lows over here, you can see how it had these lows here. Like it came back to get every single person since this consolidation. And you want to know what's funny is I see that the people that bought, and bought and bought, they might have targets, right? And their targets might be higher, they might be in the range, they might be at the red zone and so on like that. But they might be higher. They might be in this range, okay? And what happens when we come back and overlap every single person that's ever bought with the intent to hold into that range? Well, one, the institutions can acquire their positions and then they can hold them to the desired targets. Because at the end of the day, if the people are allowed to hold their positions, then they could otherwise become obstructions inside of the range, where I'm sure that the institutions want as much autonomy as possible. And I think that they're going to choose to use the range overnight. I find it suspiciously particular also that what we managed to do, put on top, looks very similar to our range. And like, is it not true that on this major movement here, we had one major move up and then a second major move up, and then we tanked off? Well, is it not true that that movement now has come back to where it all began, the first two moves? Is it not true that that's exactly what we were doing all day today? And like here, and now we have a bigger version. The whole thing that I was explaining here today, the entire day, is this. And you can see that it has the two spikes, and then the dump that retraces itself, two spikes, and then the dump that retraces itself. The whole day was this move. And you want to know what's funny? Is the whole day was contained within this trend. And this trend loved this move. Everything that it was doing while it was in this trend was part of that move, including every single last little move that it's ever done inside of that move is amounted to it finishing the day having done the one thing that it loves doing. And it finished the trend with a big one. Or like it's a matter of fact, like the idea that there is two highs and they lead into a dump. And within this, there's always two highs that leads to a dump. The dump gets retraced. But what's funny about it is while we're inside of this downtrend, every single time we made those two highs and it made a low and it came back, you want to know what happened? Is it made a new low. But that was when we were inside the downtrend. Now we're not, so we might not go down anymore. Simple as. So don't look for it to do the same thing it's been doing, because you know what's funny is we're in a new trend, and look at the steepness of it. You know how much time we have with this trend? Undeniably, we are in an uptrend until that breaks. How not? Right? And look how much time it has. Like, yeah, sure. Everybody can get exposure to this line and everything, but don't be surprised if it breaks like crap, because no matter how many of these lines break, until this one breaks, it's in an uptrend, and it's in that one. So I'm like, well, undeniably, it's set up quite remarkably, as a matter of fact. And what downtrend are we in when we break this one? And it's broken. Wow. It could easily fake break, but hey, it is broken as of now. And there is no downtrend that holds us back other than this long-term one, right? And I mean, you want to know that long-term one? That long-term one comes from the daily, comes from the very, very top. And when we break this line, what downtrend are we in? The one that comes from this high. And then what happens when we break that? No more downtrend contains the market at all. Because this is the final. Very important, I would say. Like that. Very important. Miles away though. Of course it's not anywhere close. But this trend will have to break in order for us to get there. And you know, remember when I was talking about this earlier and I was like, hey, remember the thing of this trend, we go two highs and then a dump, then we go two highs and then a dump. What happens when we get on top of the thing that's been sending us down? What happens when the thing that's been sending us down can't send us down anymore? What happens when we do two and we haven't been lower? When every single other one that we've ever done has always sent us lower. Was it a signal? You know, because I definitely thought it was. And it makes sense to why. And I'm like, well, you want to know what's interesting about this trend now too? Remember how badly it was able to do 5 waves before? Look at this one. 1, 2, 3, 4, and 5. Absolutely crisp, absolutely clean, absolutely lovely. Why is the W so clear for the people that made it through the difficulty? Very interesting. At the end of the day, I find that the downwards movement that could be associated with this could be very much like a right shoulder. We're hitting a 188.200 to the B point down here. So this level right here, it definitely is not safe to put stops above it in the event that it is hit, but we to expect it or demand it to hit is one thing. It may not. Like at the end of the day, I can see that we've got a very, very strong left shoulder like move like that. And if we come down to just hit that 127, it might actually leave that B point. You know, just like this right here. Like what's up with this one? It's like a little sneak preview. And I'm like, whatever happened to this B point here? And could we be in the business of doing this to the B points? Because I mean, this is a new trend. And how much did it pay to understand the first thing that the last trend did? Because the first thing that the last trend did happened how many other times in that trend before it ended? And it was like that thing came to an end before the trend did. So it's remarkable. At the end of the day, we saw that at the beginning there was a very, very clear move. Here, where was it? Where was it? 8 cap. And I made it here. That was the move. And that move we analyzed led to a doubling point, which later became this part that ended up pulling back. So when we see that, that's how it ended up being. There was two specific highs, two specific highs here, and effectively it made a falling wedge. This entire environment more than doubled down, only just to be returned right back to where the consolidation happened. And that happened multiple times, of course. But it happened first here, and then it did a bigger version of itself. So remember back in the day, the market we used to do big versions and then small things of itself? Now this one, it did the same thing but larger. And, we came to recognize that this consolidation meant that there was enough coiled up energy to produce the same size of movement outside of that consolidation. And this movement here was that distance, but it was also the distance of this. That's how we got that right there. And then when it came to this movement right here, the distance that it was capable of making more than doubled out of the bottom too. And, this was all part of how today's S wave formed. Literally all of that complexity just to make sure that it manages to do something so simple. And it all ended with it doing this thing, the simplicity, the simple thing, the the final thing, interestingly enough. So when people overlook today, the one thing that they will see is that thing. They won't see the difficulty most likely in getting there. So it's good to understand that today some components were factual. We can see that we might be able to have them again tomorrow. Like maybe we get a small thing first and it's replicated in the trend later on to be larger and to continue forming. And when that thing fails to form and fails to continue breaking down barriers, that's a direct threat to the entire trend and the reversal. And it was today. And I mean, today we started in a range that was already there. Like, I mean, I didn't draw this today. Where did it come from? Came from August 20 sorry, August 11th. Yeah, August 10th. So it's not new by any means. And of course now we make a 5-wave move and the 5-wave move struggles because of its positioning. I mean, how many waves is this now? Are we going to keep waving our way through to the final B point? Because on that B point hitting, it will be the case that every B point that was laid out for this to essentially hit in the S wave has been hit. And right now, the line that we're dealing with is this one. It's a very important line. It's a symmetrical triangle line. Originally, there was a symmetrical triangle here. Well, you want to know what this trend reminds me of? Is it reminds me of the trends that came before the fourth wave. When do we go past the fourth wave at any time in this? Like on any of them. Like start from the bottom. Let's go 1, 2, 3, 4, 5, and it's like fourth wave caught it, and then 1, 2, 4, 5, and it's still fourth wave, and then even if you're like, well, 1, 2, 5, 4, it's got till there. The previous trends didn't end until they broke the fourth wave. But remarkably, the fourth wave was just an average counter trend pullback. And it doesn't make sense to get knocked out on a retracement back to the fourth wave. Ever, right? Because I'm like, well, when it does more than the fourth wave, okay, certainly hedges become in danger at the fourth wave. If you ever take it down to the fourth wave low and you're profitable and you can take some off, it's always a good idea in this environment until it changes. But the fourth wave presents a lot of risks. Usually, at the beginning of the day, I explained how 5-wave moves can have an incredibly strong impact, and how that they were only going to the fourth wave. And I mean, like now, I'm like, all right, hold on, this 1, 2, this could be 3, 4 could look like 2. And it's like, well, why couldn't it if not then? Could we do it like here? Because I mean, could it be the retest? You know, is another thing. I'm like, definitely could be. So we have to beware of this one, I would say. And I'm like, well, what would that look like? Could that look like ranging the node? You know, I love that idea. And oh my goodness, do we ever have to beware of the end of the day? You know, it gets interesting right for the end of the day. A lot of people can't make it to this time because it gets really slow and really boring, and they, you know, it's tough, tough to be there. But I mean, if it's just part of the day every day, it's a lot easier to make it through it, I think. And you know, that part of the day, you know, we have to make it through it anyways if we're to see tomorrow. So better to understand it than to neglect it. Thunderstorm, 2 seconds. Wow, yeah, thunder is really loud here. But hold on 2 seconds.